Lonely Entrepreneur. For those of you who are new and joining us, welcome. We're just going to give it a couple of minutes for everybody to kind of jump on. I know sometimes Fridays can be a little slow after these long days and weeks. So give it a couple of more, a minute or two, and then we'll get going, okay? Thank you. Hey, Michael.
Hi, good afternoon.
Hi, how you doing?
I'm doing well. How about you?
Good, thanks for joining us. Hey, Michael, so I thought it might be a good idea while everybody's, gathering and jumping on. Obviously, you're someone who's been through the financial crisis of 2008 and has seen a lot of, different things. Can you share with us your, one of your most vivid stories as it relates to cash, from your experience during the 2008 financial crisis and, building Incent One?
Yeah, of course. And welcome, everybody. In 2008, when we had our company, we really, we were a pretty big company. We had $1 million operating budget a month, and, we were making a couple $100,000 a month. And it took us, kind of 10 years to do that. And pretty much overnight, we had these software license contracts with big companies. Overnight, some of our biggest clients literally got destroyed. Our three biggest clients at the time were Washington Mutual, Countrywide Financial, and General Motors.
Mm-hmm.
And for those of you that remember, literally within a week of the crisis, Washington Mutual declared bankruptcy, Countrywide got bought, and General Motors needed a bailout. So our cash situation got dramatically bad, dramatically quickly. And so we were, one of the biggest liabilities that we had as a company, we talk about, like, if everybody here has rent and payroll, and of course, one of the biggest liabilities that we had is, remember, people used to earn rewards for healthy behavior. And those rewards a lot of times were cash and cash equivalents. So for example, they were gift cards. And so we had, I don't remember the exact number, something like $10 million of gift cards that were going out every month.
Oh, wow.
And as you can imagine, that's a liability to serve your customers. And we had, after the dramatic impact of revenue, we had probably $1 million. Right? So you're sitting there with $1 million in cash, and you have $10 million of liabilities that are literally going out every month.
So that math doesn't work out.
Math never works out. And you've heard me tell the story, kind of sheepishly say, how do you turn $1 into 10?
Right.
It was literally how to turn $1 million into 10 million. The one thing I always say is, and entrepreneurs, we all think this way, is, there's always a way. There is always a way, and don't let anybody ever tell you there wasn't a way. So you sit there, probably the way a lot of people on this call feel right now, and they say, I just don't have enough cash. Like, the math doesn't work, and the Paycheck Protection Program will help a little bit, but how do you turn $1 into 10? So we did two things, and believe me, neither of these jumped off the page. Number one, all of our retailers, we used to pay, let's say, 80 cents on the dollar for a gift card. So we pay $80 for a $100 gift card from, like, Applebee's. Right. And we went to Applebee's and we said, listen, the world's collapsing. Nobody's coming into your restaurants. You should literally give us gift cards for free. I mean, you should literally give us gift cards to get people to come into your restaurants. And some of the retailers agreed, some of them didn't agree, but we made a pretty compelling argument. And for some of those retailers, we literally got gift cards for $10, for $100. So just by being a little bit creative, I mean, I'm making it sound like it was easy. We basically went to Applebee's and, I don't know, TGI Fridays and said, listen, we're going to do this with one of you. And people stepped up. And so we were getting gift cards for $10, right? So we would get gift cards that cost us 80, and now they cost us 10. So now we've reduced our liability by, 1/8. And then we had to go back to pitch to the people that had earned rewards that they should take Applebee's versus whatever else they picked. So You know, it always goes to show you that there's always a way you can figure out doing it. But we were, you know, we did that and a couple other things that essentially turned $1 into 10.
Wow, that's pretty amazing. Just goes to show you, right, that as entrepreneurs and small business owners, when the normal ways don't work, you really kind of have to go heads down and just think of, you know, put outside the box, is putting it mildly, right? How can you literally turn $1 into 10 through the creative process of, you know,
You know, and you know, I talk about it now like it's no big deal, right? It's no big deal. And we started this company, Lonely Entrepreneur, to help others. I mean, it was a big deal, right? The world was collapsing everywhere, and I'm making it sound like it was a fait accompli, right? Like it was just a done deal that would happen. You know, think what I was going to do. I'm going to walk into a corporate
right.
that's getting decimated and said, "Hi, Mr. Applebee's, you should give us gift cards for nothing."
Yeah.
Right.
Yeah.
And we were able to do it. So it takes that creativity, it takes the thought. I mean, that's not the first thing that jumps off the page, but we said, wait a minute, all of our retailers are struggling to get people in the restaurants, right? If they can get people in there, you know, they haven't. So anyway, just that the entrepreneurial creativity it takes to do that. We all have, everybody on this call has. It's just a matter of how do you execute on it.
Right. And sometimes it's probably right. You have to be creative within the industry, right? Because we have people who are entrepreneurs in different industry. We have small business owners who are, you know, own small restaurants. We have business owners who own, you know, dry cleaners, you know, everything obviously that has to do with customer facing. Really have to get creative at this point to think about, okay, how, you know, cash, revenue, all the things that we're talking about, how does this all kind of come together full circle?
Yeah, I know that there's a lot of people out there that are, you know, own real estate, and people are saying, well, wait a minute, how do I get tenants? I mean, people are completely rethinking what they're going to do with their space. You know, before we rented it to a restaurant, now I have space. What do I do with it? How do I rent it? Right. And do I do something different with it? Something that the world needs. So just all kinds of, we were talking last week about, you know, contractors that, you know, do work and how do they do work? And, you know, we talked to a couple others, I think I mentioned last week, people that are now starting to specialize in how do you create awesome home offices, right? Because everybody's stuck at home. So there's, listen, for every individual person, you know, what goes through our head is, okay, that's great for those people, but not for me. But it really does create the, or require rather the entrepreneurial creativity to have a better chance of success. You know, to try to make it through from a cash perspective.
Absolutely. Well, thank you for sharing that. I know I've heard many of these stories, and it's just every time, you know, I hear them, it's amazing, you know, what I think we as entrepreneurs can do and kind of overcome in the midst of everything. So thanks for sharing. And I think we're good to kick off our fireside chat on all around cash. So
Terrific.
all yours, Michael.
Thank you, Victoria. So just some housekeeping things. Remember, the Entrepreneur Survival Guide, which we're going to go through a piece of it today, again, available for everybody for free. Please feel to pass it around to your friends and family and neighbors and other entrepreneurs you'll see, and Victoria will send this out. It's just lonelyentrepreneur.com survival-guide, and a simple little sign up here, click on it, use that little code right there, and it'll get you all in for free. One of the things that I wanted to mention that we're doing as well to try to help, you know, there's a lot of college kids out there that are really struggling and don't have internships, and, you know, whether it's recent college grads or college students home. And we're creating a little volunteer army at the Lonely Entrepreneur. We call it TLE Army. So we're going to have this army work to get the Entrepreneur Survival Guide into the hands of people. So if you have college students that you know, college grads that you know that are interested in helping, please send them our way. And Victoria can send you the link to our volunteer army page as well. So without further ado, remember, we're in the 4th week of our 12-week survival guide. This week we're going to focus on cash, and next week we're going to focus a lot on your plan, right? So all the pieces of what we've covered, you know, in week 2, week 3, week 4 about cash, revenue, expenses, all go into a plan about how you start to manage these things, and not only in the near term, but in the long term, or as we'd like to say, how do you survive and thrive, right? So first is survival, and then how do you get to the next step? Today, we're going to focus on cash, right? How do you tap into other sources of cash? How do you have creative ways to get cash? and how do you use a kind of process to optimize the cash that you have. Okay, so again, this is your entrepreneur survival guide. So everybody that can kind of go in, take advantage of all this, and I'm going to go and focus on some of the things that you can do to find new sources of cash. Certainly, to the extent that anybody needs help with the Paycheck Protection Program, those are things that we're happy to help you with. But I wanted to focus a little bit on a couple of techniques we touched on briefly in our early cash meeting, but then also go back to just some of the things that you can do from a cash perspective to continue to manage. Okay, so I wanted to focus on two specific things here about credit cards and using your home. Okay, and there's a lot of people out there, as we all know as entrepreneurs. Nobody has to tell us this. We know as entrepreneurs that our business lives and our personal lives are not separate, and in many cases, our home mortgages, right, our lines of credit, our credit cards are all tied up together in our businesses. If you're fortunate enough to have a home that has equity, there's a bunch of different things that you can do. Obviously, if your home has equity, you may or may not have a mortgage on it. Let's say you have a home that's worth $500,000 and you don't have a mortgage on it. One great way to generate cash is to go get a mortgage, where you normally get 70, 80, sometimes 90% of that. And if you think about that, that's, let's say you got $400,000. That $400,000, remember, for a mortgage is spread over 30 years at these days 3-4% interest. So it's a really great way to generate cash to try to help you. Same thing is true with a home equity loan, right? If you have equity in your home, you can take advantage of that home equity to try to free some stuff up. Okay, and both of those opportunities exist, and interest rates are incredibly low. And if you happen to be fortunate enough to have equity in your home, there's different ways to do that. One of the techniques that people have been doing is they might have, for example, a loan on their business. And as we know, and as we shared, the SBA is providing relief for those loans. So for example, if you have an SBA loan, there's automatic 6-month deferral of those. So if you have a 7A loan, all you have to do is request from the SBA, and they will defer that loan for 6 months. Like, you don't have to make payments for 6 months. So everybody should be aware of that. But in addition to that, let's say you have an SBA loan use my example, for $400,000, and that SBA loan is at 7% interest over 10 years, and you've got a payment, right, or some other type of loan. If you have equity in your home, you could go and take that same $400,000, swap that loan out for a loan, a mortgage on your house, and all of a sudden you're spreading that out over 30 years at probably 3 or 4%. Okay, so obviously this doesn't really have anything to do with the business, right? This is just simply using equity in your home as an alternative to try to get you through this difficult time.
Michael, so a couple of people are asking, well, what does this do kind of longer term, right? Taking out loans on the house and whatnot, sort of short-term solution versus longer term.
Yeah, this is the survive and thrive, right, Victoria? So it's when you really think about it, the first thing is, how do you get through this? And how do you get back to where your business is going to be viable and generating positive cash flow? So a lot of this is just, think of it this way, especially if you have things like personal guarantees on your loans on your business. This is all just swapping $1 for another. So the ability to give yourself a greater ramp and reduce your cash outlay in the short term. Ultimately, when you're paying your mortgage and your business is hopefully bouncing back and generating cash, you're just giving yourself a little bit more leeway. Longer term, right, you've obviously got to determine the viability of your business and try to take some of the steps like we talked about with respect to revenue and reworking your expenses and other types of things to move it forward. So this is, it sounds like a marketing slogan, but this is survive and thrive, because the thrive part is like, how does my business make money, right? If you're a real estate person and you had a tenant, and that tenant was a restaurant yesterday, and you're saying, what do I do? What is it you can do with that space? So for example, a lot of landlords, my family, as everyone knows, owns real estate in New York. We're doing different things with our space. We may operate things out of that space. You may take equity in businesses that are in that space. So the thrive part is really reworking your revenue and your plan for going forward. But this is literally just giving yourself some breathing room.
Gotcha. Yep.
Okay.
Great. Thank you.
Okay. Next is I mentioned this briefly over the last couple of weeks, are 0% interest credit cards. There are a series of credit cards out there that don't require payments for 15, 18, or 21 months. Now, to normal people running businesses, this seems a little bit weird, but for us entrepreneurs, I mean, how many of us haven't used our own personal credit cards in the beginning of our business to start it, right? And what's great about this is these are essentially free loans. You know, sometimes people associate with credit cards, it's like 20% interest, and it is over the long term. But here you're talking about 15, 18, or 21 months where you don't have to make any payments, right? So let's say, for example, you have vendors you need to pay, or, right? Go to those vendors and say, hey, listen, I want to pay you on a credit card, right? And go and apply, and we'll show you some of the ones here. Apply for these credit cards and see if you can get, you know, a $25,000 line of credit on those cards. Or if you have credit card bills today, you can transfer those balances onto those credit cards. So you take something that's due in a month, you know, let's say you have a $3,000 bill that's due in a month, right? You can take that $3,000 bill, put it on these zero payment credit cards, and you get 15, 18, or 21 months to do it. Okay. So remember, this is a survive and thrive. Like, these are not long-term solutions. This is to give you some breathing room to deal with the situations that we're in. Okay. And there aren't really any games to these credit cards. That's what's interesting. I mean, some of them require to be balance transfer, like you have to transfer balances onto this. Some of them it's all about new spending. But the other thing you can do hand in hand with this is that you can say, you can go to vendors and you can say, hey, if you don't already, which most do, we'd like you to accept credit cards so I can pay you this way. The same thing is true on the revenue side. There's people that are going to customers and saying to their customers, hey, you know, there's this 0% credit cards out here. And you may want to apply for those because they give you the flexibility to pay your bills a little bit better. Again, crazy, you know, desperate times, desperate measures, not the norm. You'll see in the Entrepreneur Survival Guide, right, under this section, let me just go back to it so you can see it. Under the section about cash, you've got, right, the 0% credit cards, and that's where I am right now. And we've got a list of about, I think, 15 of them. So there's a 21-month, bunch of 18 months from Discover and Citibank and Bank of America, and then 15 months there's an Amex one, a Chase one, and a Wells Fargo one as well, and Capital One. Okay, and bunch of credits in here. A lot of times these are reserved for people with great credit or good credit. So, you know, obviously you could get denied, but just another alternative. Okay. Any questions? You want me to keep going?
Nope, keep going for now.
Great. Okay, so just kind of two off the cuff, you know, techniques with respect to generating new cash. Okay. Now let's talk a little bit about other things that you can take advantage of. So I'm going to talk about accounts receivable. Accounts receivable, these are your invoices that you have to customers, right? So you sell something to IBM, IBM owes you $10,000, and IBM generally will take, you know, 30, 60, sometimes 90 days to pay you. They owe it to you, and it's a good invoice, if you will. Accounts receivable financing, sometimes called factoring, essentially works as follows. There's companies you work with. They will actually, once you cut the invoice, they will advance you the money for that invoice, normally 80% or 90% of it. And then when money comes in from IBM, in my example, the money is collected, the balance of the 20% that you're owed is paid off. These are expensive. You know, they charge you a big interest rate. So for example, in the 30 or 60, 90 days, you might, you know, pay a percentage a month, which doesn't seem like much, but it's, you know, it's 12% a year. And these days it's a lot. But when you really think about it, imagine if you had a $10,000 invoice and you got $8,000 today. And over the course of that $10,000 invoice, you paid 1% a month, right? It's really nothing, right? You're talking about $100 a month, right? So percentage wise, it's a lot, but so, you know, this is, especially if you have corporate customers, or a track record, that you can point to, right? That shows, listen, I've had these customers for a long period of time, and and they continue to pay, have all that together, just show them, your bills, show them, your invoices, show them when you've paid, right? And if anybody has any need for this, please feel free to reach out to us. We have a couple of partners that do this. This is expensive from a percentage perspective. Don't get me wrong. It can be 15 or 20%, but when you're talking about 1.5% a month, or in my example, $100 to $150 on a $10,000 invoice when cash is everything, sometimes that's a really good solution. And there's no obligation for a lot of these. You don't have to do it with all of your invoices. Okay, so just something to really keep in mind when it comes to generating opportunities for cash. Okay. Next is vendor financing, right? So if any of you have attended some of the previous fireside chats, we talked a little bit about negotiating with vendors, but vendors also have vendor financing programs. So let's say, for example, you've got an insurance bill, and that insurance bill is for $5,000 or $10,000 for a year, and that bill is coming up in a month. Traditionally, you might just pay the $5,000 and you wouldn't even think anything of it. But most vendors provide you with the opportunity to finance that, where you could pay $50 a month for 3 years. Those vendor financing programs, a lot of people don't take advantage of them because the interest rates are pretty high. They're normally between 10 and 15%. But again, if you took, in my example, that $5,000 payment and you turned it into a $50 payment, that has all of these things add up. Okay, so this is just simply going to your vendor. A lot of times, just when you pay your bill online, you will see an option right there for, hey, listen, do you want to take advantage of one of our financing programs? And you can actually do the whole thing online. That gives you the opportunity to kind of spread it out. So nothing hokey about this. Most vendors offer something like this, and a really good way to kind of maximize your cash. Okay. One thing I want to mention is about deferring tax payments. There's a lot of confusion about this, because you have both federal, state, and things like real estate taxes. As we all know, on federal income taxes, they've put off till July 15th, and I'd be surprised if they don't move it back, having to file your taxes. So any taxes that might be due from the previous year aren't going to need to be paid for a while. That being said, if you think you're due a refund, you should file your taxes right away, because we've heard that the normal 21-day period from the time that you file to the time you get refunds is going to stay true. So definitely file your taxes if you think you're doing a refund. But other than that, with respect to other taxes, a lot of states have provided the opportunity to defer tax payments over the course of a period of time. We have underneath this particular module here what every single state is doing. Okay, so you can go and look at all the different relief that every state is providing to be able to see, and this is done in conjunction with the AICPA, which is consistently updating this. Okay, so look at your state. I mean, listen, you can go here, or you can simply go online and say, hey, what's my state and what are they doing with respect to state income taxes? Probably more importantly than state income taxes is things like real estate taxes. I know in New York City, where I live, real estate taxes are incredibly high. The city has not yet come out with a formal program about what they're going to do. I would withhold your real estate taxes. I think that nobody's going to be coming in and foreclosing on people for real estate taxes during this time. I just think they haven't gotten around to passing things. So the best thing to do is look at your state. In this document is also that they're trying to summarize what's done for all kinds of different taxes, not just real estate or income taxes. Okay, so look at your state, look here, look separately, but I would default to withholding your taxes. A lot of times these payments can be significant payments, especially kind of in the real estate business or the franchise business. Okay, other things that are kind of tactical things that you should be doing is, number one, many companies have business interruption insurance. This is kind of a standard insurance provision, not in all policies, but in a lot of policies. When you get your general liability insurance for your business, it'll have business interruption. Generally speaking, business interruption covers a lot of different things. I would suggest that you file a claim with your insurance broker or your insurance company for business interruption insurance around the loss that you've sustained as a result of the coronavirus. Now, what is likely going to happen is two things. One, you're likely going to get denied first, but number two, because they'll say, a pandemic was not included in your business interruption insurance, not listed there. Interestingly enough, the NBA in their business interruption insurance has pandemic listed. But
What
a
do they
lot
know that
don't.
we don't?
That's right. But what I will tell you is that there are many states, New Jersey is one of them, in which the legislature is basically passing laws that are saying, listen, these insurance companies have to cover losses under business interruption insurance. So again, different state by state, but I would definitely file and file for the amount that you think you lost and get it on record, because I think different states are going to come out. What we've heard is that it may be that they force these insurance companies not to pay the whole thing, because that amount of money, as we know from things like the Paycheck Protection Program, is a massive amount of money and would put a lot of insurance companies out of business, but may say that they have to cover up to X, up to $20,000 or something like that. But this is a step that you should definitely take. Okay. Next is, there are provisions in contracts, what they call force majeure. And, I think for those of you who've been on the calls in the past, we have communicated that we believe that before you're paying any significant vendors, you should be negotiating with all of them about reducing payments, spreading out payments, deferring payments. We talked about how banks are letting people, defer for 90 days and many negotiations. And we've been helping people do some of these negotiations where we're basically going to their vendors on their behalf and saying, listen, we need a 90-day forbearance, and then after that we need to be reduced, and you kind of get into this whole thing. That would be my first approach. I wouldn't necessarily worry about the legal mumbo jumbo, but to the extent you have these provisions in your contract, it's called force majeure, and it basically is designed to account for things that are outside the party's control, or sometimes what are called, as you see here, acts of God. Fires, floods, wars, and all these provisions, you can imagine, because of the lawyers of the world, all are a little bit different, right? They have different language and things like that, and very few of them will actually list pandemic. But again, in addition to your negotiation, if you do have this provision in your contract, you should be talking to your landlord about that, not your landlord, your vendor, if you will, your contract party, about that you believe that you don't have obligations under this because of force majeure. Okay, nobody's suing people over this stuff, right? For $10,000. So this is all just a negotiation. And ultimately this can lead to lawsuits down the line, that some will win and some will lose. But this is just something that and if you have any lawyers, or certainly we can help you, these things that we should all be doing. Okay. So Victoria, let me stop there. Any questions?
So we had a question just going back to the credit card. So I don't know if you want to do that now or a little later.
Sure, let's do it.
So the question was, in terms of the transfer fee, right? Somebody said that, they would implement the strategy, but the transfer fee would almost amount the same as to the amount being transferred. So is there a way around it? And I was thinking probably maybe it makes sense to call up the credit card and see if they would maybe waive it or reduce it at a time like this.
But there shouldn't be any transfer fee. I mean, for you to transfer a balance for most places, there shouldn't be any transfer fee. You're not talking about moving money, right? You're talking about, say, if I have a $10,000 bill on my Amex and I want to move it to Citibank, you basically would use Citibank to pay off the Amex. Right. So there shouldn't be any transfer of any money. And I would be very surprised if there's significant transfer fee from credit card companies. But yeah, I would just talk to them about it. Remember, most credit card companies right now are allowing people to defer their credit card payments for a period of time without interest or penalty. So everybody's kind of doing their part to try to contribute to the cash situation. So I don't think that there should be significant transfer fees
Yeah, I
associated
think
with this
usually
stuff.
there's about a 3% transfer fee that's applied, but I think at times like this, it's worth to have a conversation with them and see if they would waive it or
Yep.
just go around it. Yeah.
And sometimes a bank will flip you into their own credit card, right? So if you're at Citibank and you're in a regular credit card and you want to flip into a 0% credit card, sometimes that's a really good place to go as well. If you say to them, hey, listen, I'm leaving, right? I'm going to go somewhere else, and I'm willing to pay this off, right? They'd say, wait a minute, we want you to stay here. So again, these are different times than normal times, but yeah, Victoria, your suggestion is exactly right. I would ask them to waive any significant fees.
Yep. Thank you.
Of course. We talked about, I'm sorry, Vic, any more?
No, I think we're good for now.
Gotcha. Okay, so I want to talk a little bit about managing cash. And obviously, where cash goes in and where cash goes out is critical. And these are things that are applied really in a good business, not necessarily just related to what's going on with COVID. So, a lot of times we struggle, especially in smaller companies, with the ability to really optimize how our cash comes in because we don't have big accounting staffs and, we have people doing multiple jobs and things like that. So let me give you a couple of things to think about, some of which we talked about a little bit, and some we can, some we'll add to here, okay? First of all, you should have these days at least every week. I mean, some people are looking at cash every day, right? So every week you should formally sit down and figure out, have a cash plan for exactly where you are with your cash, what's coming in, what's going out. And as the leader of the company, you should be checking off every single thing that's going out the door and spending time on all the cash that's coming in. Now, obviously, we talked a little bit last week, and we're going to talk a little bit later about just, how do you go to customers who are struggling and ask them for money. So these are delicate balances. Next is obviously you're looking at your accounts receivable versus your accounts payable, right? You're looking at what's coming in versus what's going out, and you're trying to analyze that and work through that. And as you make modifications to it, like for example, you renegotiate with a vendor, that balance changes, right? And it hopefully is turning in a more positive direction as you negotiate some of these things. Next, certainly is if you have individual customers that have larger dollar balances with you, you've got to chip away at those, right? Especially if it's just been common practice for them to run balances and they have, it's just been consistent and hasn't been a big deal in the past, and now that it is, so you have to have some of those dialogues. That leads into what we said before about factoring your receivables, right? If you have these good customers and you have the ability to factor receivables or finance receivables as it's called, then you can, this is just another way to maximize it. Another couple of things, right? So a lot of times, like let's say, for example, your customers are large companies. We all know the large company game, right? You send an invoice to them. It takes 2 weeks to process into their accounting department. Their contract says they're supposed to pay you in 30 days and they pay you in 60. And it's 30 days from when they get the invoice, right? All that kind of stuff. So a couple of different techniques. Number one, send your invoices far in advance. Let's say, for example, you're providing a service to a large company, and previously you would bill at the end of every month. So it would be, the end of April, you would take a couple of days, you'd bill on, May 5th, right? And that May 5th starts that process with the company, right? When they get it, they process it, they wait 45 days. Now, maybe you can bill on April 15th. Right? Or maybe if you're doing a month-to-month service, right, you could actually bill for the whole quarter, right? So in my example, you'd bill for January 1st for January, February, and March. So that way, when they take their 30 or 60 days to do it, you're getting paid, in my example, at the end of February, as opposed to billing each month and having that stretch, 30, 60, 90 days after you bill. Okay? So again, sometimes there's negotiations, sometimes you got to talk to them. A lot of times these accounting departments at large companies are not really paying attention, right? So you can simply submit a bill 15 days earlier, right? And it will start their process. Certainly if you have a good customer relationship, pick up the phone, call them, talk to them about it, and ask them to, if there's a way that you can go ahead and do that. A lot of times, sometimes contracts address this about what you're supposed to do and not do, but sometimes sending invoices far in advance is a big deal. Also is billing up front, right? So let's say you're doing something for $10,000 and normally you would collect, $500 when you sold when you signed the contract, and you'd collect the other, $9,500 over the course of a couple of months or however long you were providing the service. Now what you might do is you might have a 30% of it is upfront, right? And the rest of it would come in the future. Now, obviously, the people on the other side of the table are all facing cash issues as well. But working through these things, and as small companies, sometimes we think that we could never ask a larger company to bill them up front. Sometimes that's true, but I know billing at the beginning of the month versus the end of the month often can be a really nice solution for accelerating your cash intake. Okay, so obviously billing up front and sending in invoices in advance. Next is inventory. Lots and lots of companies don't have inventory, but a lot do. And so if you were operating in a business that would get 30 days of inventory, right? And so you're ordering once a month, and that's a nice efficient process. And every month you sit down and you figure out how much inventory you need. There's a couple things that you should be. Number one, you may have to be ordering inventory every week, right? So instead of having a whole months of purchases, you might have to do them week to week to week to reduce the cash outflow. Secondly, right, is financing, right? So a lot of times when you buy from vendors, right, you will get like 30 days that you can pay. Some you have to pay in advance, but a lot of times you get 30 days you can pay. You can go back to them and say, listen, I need 60 days, I need 90 days. And again, all of us are always on both sides of the table. So I think the reality is that sometimes they'll say yes, sometimes they say no, but cash is everything right now. So there's people that will be willing to negotiate if they think they're going to get paid. And so practicing this kind of smart inventory management in terms of both how much you're ordering, as well as other things are really, really important. Okay. There's some really good things in here about the period when you go back to thriving that I'll just mention here. It's not so much survival mode, but I think some things to think about. Number one is, being on budget, but you're out of cash, right? So a spreadsheet looks really good. Hey, we haven't spent more this than that, but the way cash flows in and out of a business is different, right? And this relates really to number two, which is that, we just recently, for an early stage entrepreneur, did a bunch of sessions that explained to them the difference between an income statement and a cash flow statement, right? Income statement is what you sell and what your expenses are, but they don't reflect when you pay for things, right? If you have a bill today and that goes on your income statement for April, you may not pay that for 60 days, right? And the same thing's true of things that you sell, and that's what creates accounts receivable. So you have to be really mindful of the fact that your income statement can look really good, but right now, first and foremost, it's really about cash. Okay, so there's a bunch of normal business operations stuff in here that I think can be really helpful to people that are really more about managing cash, going forward when your business kind of stabilizes a little bit versus now. Okay, so V, I see there's a couple questions, so I want to stop.
Yes, so can you go back actually and just explain to some folks who may not be as familiar about what is factoring?
Sure. So factoring is essentially taking your accounts receivable, right? Your invoices, if you will, and financing them. Financing them meaning that you do a deal with a factoring company or accounts receivable company, and certainly we have some if you guys want us to recommend some. So let's say you have a $10,000 invoice, and normally you'd send that invoice to, in my example, IBM, and IBM would take 90 days to pay it, and you need that $10,000 now, right? It's not like you can go knock on IBM's door in Almark, New York, and speed up that process. So what you would do is you would sign a contract with these factoring companies, and essentially what they would do is once you created the invoice, they would advance you either 80 or 90% of the invoice. So they would give you $8,000 or $9,000 today, within a couple of days of when you get the invoice. Then when the money is collected from IBM, let's say 90 days later, that money comes in, right there, and the 20% that was the difference, that money then comes in and you get the balance of the 20%. What you do on that $10,000 is you pay a financing fee. And that financing fee is generally a percent to 2% a month for each month that it's out. So, a percent to 2% a month over a year is a lot. It's, 12 to 24%. But right now, when we're talking about, having to conserve cash and get cash, in that circumstance, use my example, it's a $10,000 invoice. Let's say it's 1% a month, right? It's small, it's $100. Okay, and then as your invoices come in, you just basically do that with all your invoices. So if you had 10 $10,000 invoices, they would all go, you'd be advanced $80,000. When the money came in, you'd get the other 20, and then you'd pay on $100,000, you'd be paying essentially, 1% of, you'd be paying $1,000 a month. So that's how it works.
Great, thank you.
Makes sense?
Yeah.
Any others?
I think we're good for now.
Okay, gotcha. One of the things that we wanted to talk a little bit about was just about some of the additional bank programs and credit card programs that are out there. We mentioned this a little bit. With respect to your mortgage or your credit card, there are essentially deferral programs in which, a lot of times you can wait 90 days. They're giving you a 90-day deferral on your mortgage, right? So, and this is usually not that hard to do. You call up, they'll give you 90 days. You have to sign a little one-page agreement, and generally speaking, they're not charging you interest or any penalties. And the same thing is true with credit cards, right? A lot of times you can just go to your credit card company and request really just online. A lot of times there's just a little form that you have to fill out what to do, and they'll automatically defer your credit card. Okay, so you'll see within this particular module, there's a list of virtually every major bank in the country and what they're doing. These are evolving and changing, so just kind of go online, see what's going on with your banks, and I think that there's ways to take advantage of the bank and the credit card programs.
Yep.
Okay. There are also, with respect to rent, there are many prohibitions that are coming out prohibiting foreclosures and evictions for a period of time. Now, one of the things to realize is that this largely applies to individuals, right? There are some states that are preventing foreclosure and evictions when it comes to businesses, but there aren't as many of those. It's really for individuals. So that's where you can essentially, quote unquote, defer your personal rent, which is obviously different from your business, but it's still cash. And there hasn't been a lot yet done with on the business side. What I would say is that with your business rent, this is all negotiation. I mean, think about if you live in a town in Missouri and the town has 100 restaurants, right? Those 100 restaurants, unfortunately, are tenants that are really struggling right now. And so landlords, really, I mean, they can be very heavy-handed if they want, but the idea that they're going to be able to take their people to court, I mean, it's going to take a long, long, long time. And so you have a good amount of leverage. It doesn't sound like it, but you have a good amount of leverage to have discussions with them about what you can do with your rent in the short term. So the prohibitions don't help you as much, but certainly the position you're in, as unfortunate it is, gives you the ability to say, listen, you can go after me, but isn't the better thing to do try to work something out where I'm going to be a tenant here longer term, and you have to give me 90 days of deferral, and you have to spread out my payments and all that fun stuff. And I can tell you in New York City, where the retail market was already struggling, those conversations are happening every single day.
Michael, so we have a question in terms of cash. People are asking, does it make sense to reduce the cost of their service or products right now in order to generate cash, right? Whether online or maybe, kind of prepaid gift cards for future use, but with with a discount to their product.
Great question. I think that, think about the positions position that so many people are in, everyone here included, in terms of trying to generate revenue and preserve cash like we're talking about here. So yes, I think that the more proactive you can be about repricing, repackaging, and being proactive about providing future services, the better. And so I think that the idea of, if you have a ticket item for $5,000, let's say you do, PR, and your normal monthly fee is $5,000. Maybe you say, okay, I'm gonna have $1,000 package, right? Where I'm gonna do 1, 2, 3, and you can use me as much as you can use me. Or maybe you don't even have a minimum, right? Maybe you just say you can use me as you use me, and it costs, what PR costs, 50, $75 an hour. So repackaging, certainly gift cards for future use. You really want to try to hold on to customers. It doesn't really do any good to put big price tags in front of customers that we're not going to pay them. Now, don't get me wrong. Part of this is, who are you selling to, right? So if you're selling to Amazon right now, I don't think there's any lack of money, right? So a lot of it also is who you're going after. I'll give you an example. One of the companies that we're working with has really cool business of basically children's programs around sports and the arts and technology, where they run all of these programs in a couple of towns in Long Island, New York City, where it's basketball camps and soccer camps and art camps and all this kind of cool stuff. Now, as you can imagine, their business is decimated. And so, but every once in a while, in their soccer camps and basketball camps, they'd have a professional athlete come by, right? And the professional athlete would be there for, a half hour, an hour, once in a month. And so we're like, well, wait a minute. And that was limited to the kids that were in the camp that week. So maybe there's 50 kids in the camp that week, right? And maybe it happened, the next week. So what we said is, well, wait a minute, why don't we provide access to this professional athlete for an hour? And instead of it being limited to 50 kids, why don't we make it 500 kids? Like, so why don't we market and say, for $25, right, you can participate in this hour session with your child. And think about how many parents are sitting at home with their kids. They're looking for stuff to do. So taking a business that frankly would generate, 50 kids at a couple of $100s a week, right? And the numbers that go, kind of with that, and turning it into 500 kids at, right? You can do the math. Now, it's not the easiest thing in the world to go from 50 to 500, but now all that this gentleman is doing is now marketing these online opportunities to talk to a professional athlete, and the professional athletes are more willing to do things than they would otherwise be willing to do.
Right. And a follow-up question to your answer is, I think people are worried that if they discount their service now, how will that work out in the future once we're past this time?
Great question. I don't think discounting your service now really makes a difference, right? Because everybody understands that they're doing that. Right? It's just one of the things that they have to do. What I would say is this: prior to COVID, we lived on a scale of 1 to 10. 10 being a hyper competitive world and 1 being no competition. We kind of lived in a 9, right? Where there's competition from everywhere. There's always somebody else that does what you do. And as we like to say, and the philosophy we have at The Lonely Entrepreneur is, there's somebody out there providing your product or service for basically for free, even pre-virus, right? Now with the virus and after the virus, unfortunately, because of unemployment and all the things that we all know, it's going to be an even more hyper-competitive world. So if you're competing on price post-virus, you will lose, because the price that people are going to get is zero. You can go on Upwork now and get a designer that used to work at a fashion magazine to do brochures for $250, right? Mm-hmm. So the point is, you have to compete on, and I'm not just going to say value, because I know when people used to say that to me, I'd be like, okay, well, what does that mean? Of course you're competing on value. You can't ever compete on price because you're competing against zero. you have to compete on real know-how. Like what are you bringing to the table that they don't really know, right? How do you, I use this analogy all the time. If I was going to go running right now and my neighbor said, remember, if you turn left on this block, there's a pothole right there, right?
Mm-hmm.
Step in it.
Yeah.
Quickly for that.
So
versus somebody else that, versus somebody else that would say, hey, I do social media and whatever, and I'm going to reduce my price. And anybody that's competing on price post virus is destined to fail.
Right. Absolutely. So here's another question for you. At a time like this, would you ever approach your competition to, come together on a product or on a service to kind of serve the consumers together, just because of the time, because of what we're experiencing?
It's really hard to do, just because competitors are battening down the hatches on their own. And it's very hard to think of, kind of 1 + 1 = 3. Those things are very forced. Now, that being said, I think we're going to see massive consolidation of hotels and restaurant companies because they're going to have to. But those are big corporates that are used to doing deals.
Mm-hmm.
I think it's really hard. One of the things I think it's going to happen in New York City, it's happened, if anybody that's ever been to Chelsea Market, like it's a whole block of restaurants. So it's not a bunch of individual tenants. I think you're going to see people in consortiums doing things.
Yeah.
But it's hard. Like you need somebody to help you work through that, because how are you going to share revenue? So it's a little bit complicated. Now, if you're both facing the same things and you both have rent and you both have overhead and you both have this and both have that, you're seeing law firms are getting forced together. But a lot of times they're forced. One of the things I would say is think about within your industry, potentially customers and customer sets that you wouldn't have gone after before that maybe you would go after because they were too small or whatever. But it's a very hard thing to do for smaller. You could certainly start the conversation, but you have to be really candid about, both of you are going to be very sheepish about saying, hey, I'm really struggling.
Right.
And it's very hard to have those types of conversations, to do that.
And obviously disclosing some of the know-hows that you were just talking about, right? That are primary to your business.
Yeah, exactly.
Okay, another question. Is this a good time to perhaps, start a new product or service that could be an additional cash generating venue for you?
100%. We never want to ignore the survive part. And as you can tell, we're doing a lot to try to do what we can to help. But the thrive part is really the rub. We can all, move around deck chairs on the Titanic as much as we want, right? And some of the questions here are about, what do we do with loans and stuff like that. And don't get me wrong, you can make changes right now in your expense base and in your cash base that can set you up for great success in the future, right? You're going to see airlines and hotels filing for bankruptcy, not just because they're running out of money, because now they're going to get to go renegotiate all of their cost structure and set them up for much greater success in the future because their costs are lower. So, but that being said, at the end of the day, it's about revenue, right? It's about where do you go and what type of revenue to have. So this can be new markets, right? And it can also be new products and services. Okay. Think about Lonely Entrepreneur, right? Obviously, we're not generating revenue from it because we're trying to help, but we created this entrepreneur survival guide because there was something that everybody needed.
Yeah.
There will be different things that people need in this new climate. I'll give you an example. We work with a nonprofit accounting firm. They do accounting for nonprofits. A lot of their nonprofits and many nonprofits rely on events. They have an annual gala, they have an annual fundraising that's usually some type of physical event, right? And they can't do that anymore. So now they're saying, okay, where do we go? If this is going to go on for a while and our clients are going to struggle, where do we go? And so one of the things that's one of the areas that's pretty well funded and that's going to start to come back, although in a different way, are charter schools. Right, charter schools are working really, really hard on online learning, and they're usually very well funded, right? So charter schools are a lot of times nonprofits that they can chase. So it could be a different market that you're going after. It could be a different product that you create. I can tell you that Just like we all have more time with family at home, we also have more time to take a step back and look at our product and our product suite and be prepared for the types of volume, the types of changes rather that exist. What I would say is that you have to be really thoughtful about what the new pockets of demand are that are going to emerge and the pockets of demand that are going to retract, right? If you're a restaurant, right? I saw a coffee shop now has completely transformed itself into a delivery service for food, right? So products in and of itself are not enough. You have to think the market's going after and where the demand is going to come.
Right. Makes total
Terrific.
sense.
Cool.
Okay. Yeah. Go ahead.
I'm sorry. Others?
I've been asking them as they were coming in, and you covered a bunch of questions that I had in the queue. So.
Okay, great. So I know we're getting down towards the end. Victoria, please, if you can make sure that the address for the Entrepreneur Survival Guide gets out there, that would be great.
Yep, it's already in the chat. Everybody should be able to see it, and let me know if you can, guys.
Terrific. So I'm just going to take everybody back to where all of these resources are here. In the Survival Guide, as you can see, there's a whole section about cash, which is about, kind of conserving, right? And really some of the things we talked about here, where there's all the detail, and then finding new sources of cash, right? And this is obviously all the descriptions of the Paycheck Protection Program and requirements that are obviously moving targets. And there's all kinds of different things happening state by state, where there's financial resources state by state coming out. So make sure you check your state resources. And then we talked about using your home and zero interest credit cards. Okay, so all these resources are here. The one thing I want to make sure everybody understands is, renegotiating with vendors right now is about cash management, right? It's about, okay, I can't pay my rent, I have to do this. But in the future, what costs you $1 today could cost you 50 cents going forward, right? So you can go and talk to a landlord, for example, about reducing your cost structure. So when you do emerge from this, your cost structure is going to be much lower. And that's another thing that has an impact on cash. The same thing is, and I hate to say, the same thing is true employees, right? Employees are going to have to restructure their compensation, where if they made $100 today and had a bonus for $10, they might have to have a lower base salary that is more aligned to goals and things like that. So obviously with employees, there are human beings involved, but generally you're talking about going and reducing your cost structure. I mean, every airline right now is going to its airline leasing partner like Boeing and saying, I used to pay $100 for this airplane. I got to pay half that. So obviously none of us wish we were in this situation. But the fact that you are can set your business up for greater success in the future, because you're reducing your cost structure, not just for the purposes of managing cash, but for the purposes of going forward. You can, if you're adept at it, some of these negotiations you can do can set you up for a great deal of profitability in the future. Cool.
Great.
Any others?
Somebody just asked if a mortgage company can opt out of offering a forbearance or deferment on a mortgage payment.
From what I understand, any bank that gets money from the FDIC or does federally insured loans has to do it, and that's virtually every bank. So I don't think that banks have the option to do it. Now, they don't have any obligation to do it on any kind of business loan, but when it comes to mortgages, I think it's pretty universal that they're not allowed to, that they have to give you these deferrals. One thing to realize with respect to the banks is some of them make it harder, right? Some of them are purposely making it a little bit difficult to kind of get through the system. And I know we have revenue and expense and, right, all those things to deal with. Don't give up, right? Same thing with the Paycheck Protection Program. It's a pain in the ass. Don't give up. Do what you got to do. Push through. Use your entrepreneurial energy and spirit to try to make it happen. But for the most part, the mortgages are supposed to be, supposed to have 90-day period.
Gotcha. Thank you.
Cool. Okay, great. We're coming up now towards the end. I hope everybody stays safe, stays healthy. I hope you know where to find the people at The Lonely Entrepreneur. Obviously, you've got the Survival Guide. I wanted to also make sure that people know that, when you get the survival guide, you also get access to what I'm showing you right now, which is our online community. And this is where, you can go on here and ask questions, and our team answers all those questions, and anything that you need. There's lots of other entrepreneurs in there that are talking to each other all day. If you don't want to share your question in a public forum, you can just opt out into this little chat window over here, and send it to our team at The Lonely Entrepreneur to be able to do it. So remember, all of this is free. Feel free to take advantage of it. And we're always here to help, with anybody that needs help with any of their stuff. So Victoria, you have any other housekeeping things? Other than that, we'll wrap up.
I think we're good. Everyone, just feel free to reach out. Any follow-up questions or any issues with downloads or anything, we're here to help. And thank you all for coming and joining us.
Thank you.
Thank you.
Thank you.
It was a great meeting.
Thank you.